Welcome to Called to Build, the podcast for faith-driven entrepreneurs and kingdom leaders who are ready to build what outlasts them. Hosted by Willis, entrepreneur, pastor, and marketplace missionary. Each episode delivers biblical wisdom, insight, real-world strategy, and bold encouragement to help you lead with purpose, steward with wisdom, and multiply your impact. Because faith and business weren't meant to compete, they were meant to collide. Now, let's step into today's episode. Welcome to Called to Build. I'm so glad you've joined us today. With me is Mike Jesowshek, CPA. Mike, welcome, and thanks for joining us.
Yeah, Carl, thanks for having me.
And go ahead and tell us a little bit of your story today, Mike, before we dive into our topics.
Yeah, so, an interesting way of getting to where I am today. So been an entrepreneur since the age of 14, started my career in an online marketing industry and was in multiple businesses, some with partners, some without partners, some with massive successes and exits, some with failures. But as I was going along in that journey of being an entrepreneur, I wanted a backup plan, or I should say my parents wanted me to have a backup plan. And so ended up going to school for an accounting degree. I got a CPA and ended up moving into the finance side of those online marketing companies that we were in, fell in love with that accounting and bookkeeping side of those businesses. But eventually we had a business where there were 7 partners in one company, and we were all really good at certain things, but not the same thing. And so instead of trying to continue to pull a company in multiple different directions, we said, hey, why don't we go out and do what we do best and start our own organizations for that? And so that's a point in time in 2013 that I started a digital accounting firm focusing on bookkeeping for small business owners. And along that journey of running that accounting firm, I started to see the frustrations that people had around tax, where they just could not get good tax advice or straight answers on the tax advice. So I eventually started to dig into it on my own and learn these things so that I could help my clients out in those areas, and fell in love with this idea of tax planning and tax strategy. And eventually, about 8 years ago, started a podcast by accident, but with a podcast focused on how do I help business owners understand what tax strategies are available to them and how they start to implement those strategies, and just really fell in love with this idea of teaching on a large scale when it comes to tax planning. So eventually sold the majority stake in my accounting firm back in 2021. And ever since then have been full-time on a podcast and training programs and software, all surfaced around tax planning for small business owners.
Fantastic. So, Mike, you talk about tax planning versus tax preparation. And so from a stewardship standpoint for our audience, how does tax planning help a faith-driven entrepreneur better manage and multiply their resources? And how is it different from just tax preparation?
Yeah, so I often say, tax preparation is just taking information and sending it to the government agencies. So tax preparation is what everyone does at the beginning of the year, usually by April 15th, where you file your tax returns. And all that is it's telling the government, here's the type of income that I had throughout the year, here's the related expenses, and it's just sending that to the government, which I want to be very clear. Tax preparation is important. It's required by law, but it's not saving you anything in taxes. It's just telling the government, hey, here's what happened to me throughout the year. Tax planning, on the flip side, is taking that information, saying between January and December, what strategies can we learn and implement to lower our tax bill so that when we file that return in April, we know that we've paid the least amount in taxes as legally possible. And so tax preparation is what do we do throughout, or what do we do at the beginning of the year to send that information up into the government agencies? Tax planning is what are we doing throughout the year before 12/31 to make sure that we're paying the least amount in taxes as legally possible. And I think tax planning, especially for your audience, is so important because it helps understand what opportunities are there to put more money in our pocket. And in a faith-based organization, of course, what are we going to do with more money in our pocket? We're going to help other people out. We're going to add to our tithe. We're going to do different things with those funds that way. And these are all opportunities that are available to us, that are given to us by the government. It's just our duty to understand what is available out there and then to correctly implement it. So these are all things that it's not cheating, it's not loopholes, it's not going backdoor on these things. These are all things that the government has put in place for a reason. And it's our opportunity in the planning piece to understand What are those opportunities that are available to me? And how do I be a good steward of the funds, implement those strategies, and that puts more resources in my pocket to do more on the mission that I want to help support?
Fantastic. Yeah. So, as I hear you, what tax planning really does and having a good intentional strategy does is really opens up more opportunities for you to give more, which is really at the heart of faith-based entrepreneurship. I started my business because I want to generate revenue. I want to become a pipeline of resources to something that really is near and dear to me. And instead of giving it off to pay more taxes, I'd rather divert more of that to the things that I'm passionate about. And I think that's really part of what you're describing is by taking advantage of the things the government's put in place in the tax structure, I'm able to do that. I'm able to give more away. Is that what you've experienced in your experience?
Yeah, exactly. And I often say, often is that, if you put a marketing campaign into your business and we could say, okay, put $5,000 into a marketing campaign. I don't know if my business is going to grow from that. I hope so. And I would encourage people to look into those different things, but there's no guarantee on the type of more money that we can generate from that to then support our mission. But what we can guarantee is that if we put a strategy in place, a tax strategy, we look to hire our kids, we look at maximizing deductions, we put a tax strategy in place, I can guarantee that that will save taxes, put more money in your pocket, and that more money in your pocket can be used on a mission that you feel close to your heart. And so I think that that is such an important concept for people to understand is we're just taking advantage of what's available that allows us to have more money to do what we want to support.
That's good. Now, Mike, when an entrepreneur is starting a business and they've got this kingdom focus and they're thinking about their things they want to support, things they want to give to, should they be thinking about their entity structure just beyond taxes, even in the beginning? And then what are some of the things they should be thinking about in that entity structure if that's their long-term objective?
Yeah, I think the first piece comes to what type of structure are we going to set up? Is this going to be a for-profit entity or a not-for-profit entity? And that's obviously going to be a big direction on which way we're going. But we see so many faith-based entrepreneurs that are in the for-profit realm, even though in the backside they're supporting different ministries, different areas. So there's definitely a route of first we need to determine, are we going for profit or are we going down the nonprofit routes? Once we start to go down that for profit route, we have to start looking at, okay, tax efficiency, of course, is important because the more taxes we save, the more money we have to support the mission that we ultimately want to support. And so it's understanding what tax structure is going to save us on a tax standpoint, but also from a legal standpoint as well. And so oftentimes we see people start out as LLCs that provide some legal protection. Simply starting an LLC does not provide any tax savings, but it provides us with some legal protection that an attorney can go through. But then it opens up the door for a potential S corporation election down the road when it makes sense in our business. So that's typically the structure I think is important to have as a solid foundation for that. But then when we look at from a legacy standpoint and from a faith-based standpoint, we also want to look and think about exit planning. What does the exit planning of that structure look like? Do we plan to sell this down the road? Do we plan to give it to our children down the road? Or is there another route that we want to think about? And that's something we want to be thinking about from the foundation. Now, of course, and you and I both know this, things change. So we might say, here is our planned plan of action, but it might completely change it. And that's okay. But having a solid foundation for that is important. And the other thing that we often see in small business owners is having a revocable living trust that can help own that LLC or that entity structure that we have set up, especially if we're in the for-profit range. And that trust is going to show in the event of our deaths, what is going to happen with not only that business, but everything else we have in our life, but specifically that business, which could be the major income generator of our family. What's going to happen with that? And are we bringing in a church as a recipient of that, or some other ministry that we want to help support as a recipient of that when it comes down to that point? So a lot of different planning around entity structuring. The biggest thing that I say for most small business owners is once you have an entity that you or a business that you are solid on starting, get an LLC opened up. It creates that liability protection for you, but also opens up the door for a potential S corp election down the road, which can help minimize the amount that you're paying in self-employment taxes.
Yeah, you opened up a lot of things there, Mike, and I think one of the things that's interesting is this idea of multi-generational ministry aligned, and those are things you need to be thinking about. What is the end game, if you will, for this business that you're starting? And so, if you are thinking multi-generational, if you are thinking about giving that to the charity at some point, then you do want to be thinking about things like trusts and how that structure is put together. So I appreciate you diving into that. That it's not just setting up that business structure, but then who really owns that business structure? And I think that's a great topic of discussion. Let's kind of take this another step forward, and that's deductions. And so part of stewardship is making sure that you give to Caesar what's Caesar's, and give to God what's God's. And so in this stewardship structure, how can you use pre-tax strategies to improve the business's financial health, but then also make sure you've got more to give away to fund the things that you're passionate about?
Yeah. So when I think of pre-tax versus after-tax spending, I like to give this example of a W-2 worker. So if you're a W-2 worker, you don't get business deductions. So you get your gross wages or your gross income from your W-2 job. Your employer takes all these taxes out, and then you get your take-home pay. And that take-home pay is what you gets deposited into your bank account, and then you go out and do all the spending with that take-home pay, and you giving and everything else that you're doing. And I do consider all of that after taxes spending. That's all spending that's been done once those monies that the income that you earn has already been taxed. But if we flip the switch and look at it from a business owner, we have our sales or revenue, and we have all these expenses that go into our business, which brings us to our profit. And we get taxed on the profit of our business. So any spending that we do inside of our business is considered pre-tax spending. That's money that's being spent prior to it being taxed. And so the goal as a business owner is to say, how do I take after-tax spending that I'm going to do anyways, but instead of using after-tax dollars for it, how do I move it into pre-tax spending and get a tax deduction for that spending that I want to do anyways? And so this is kind of culminates around this idea of maximizing deductions that I often talk about. And so many people, when they hear the word maximizing deductions, they think, go out and buy something I don't need simply for a tax deduction. It's not anything I need. So go and buy a new truck and get a tax deduction for our business. So go and buy a new piece of equipment that we don't really need. The piece of equipment we have is doing good, but go out and buy a new piece of equipment that we don't need for a tax deduction. And so I flip the script on that concept and say, okay, instead of needlessly spending money on things that we don't really need, how about instead first we look at those spending that we can do that we can move from after-tax spending into pre-tax spending, take spending that we're going to do and get a tax deduction for it instead inside of our business. Now, of course, if you need a new truck, if you need a new piece of equipment, if you open up a new line in your business and need those things to help your business, let's take advantage and let's do it in a tax efficient way. But let's not just spend money to spend money for a tax break. Because if we spend $100 and we're in the 22% tax bracket, we save $22 in taxes, but we're still out $100. And so the net result is we got whatever we bought on a discount, but we're still money out of pocket. And so I'd much rather see people move after-tax spending into pre-tax spending, and then take that additional money that they got from that and use it to build out on the mission that they're dear to their heart.
That's good. Now, Mike, when we talk about taking every deduction, some people might be concerned about integrity and transparency. So how do we maintain those things when we're taking all of those deductions?
Yeah, so we often talk about how the tax code was written the way it was for a reason. At some point in time, there was something that passed that wanted to be done, and that's why it's in the tax code. And so the biggest thing when I talk about maximizing deductions is we can take any strategy and abuse it, right? And we can take any strategy and make it illegal. But the important thing is understanding what strategies are available to us, and then how do I implement it correctly according to code? And so that's the understanding of learning the tax strategy and then correctly implementing it. And so we can look at things like home office, maybe it's automobile, maybe it's meals, travel, technology type expenses, or setting up a board for our business or hiring our kids in our business. And all these are really good strategies and really good ways to move after tax spending into pre-tax spending. But we need to understand how to do it correctly because the code is very specific. All of these things are completely valid business deductions in the code. But if we look at home office as an example, we can take something that's black and white in the code and make it illegal simply by not implementing it correctly. If our office is 10% of our home and we file a return that shows it's 90% of our home, that's taking a strategy that's legal and making it illegal. So it's all about understanding what strategies are available to us, and then how do we correctly implement that and provide the documentation to help support that, just in case there is an audit.
Oh, that's good. Now, Mike, you brought up, this idea of transparency, accountability. And one of the things you mentioned that I think is a great way to do that is setting up a board. That's a great way to build that into what you're doing, but it also brings in some tax strategy. And so let's talk about that. How can setting up this board um, be a strategic tax move for you? And of course, it's got some other benefits as well when we talk about transparency, accountability, and keeping things as they should be to where you're not abusing the tax code. If you're serious about building a business that honors God and multiplies kingdom impact, I've got something just for you. It's called Faith-Driven Success, a free resource designed to help you align your faith with your business strategy so you can grow with confidence, clarity, and conviction. You'll learn how to put biblical principles into action and start leading with bold purpose in every area of your work. Download your free copy today at biblicalgrowthstrategies.com. That's biblicalgrowthstrategies.com, and start building success that actually lasts.
Yeah, I say this is one strategy that every business owner, regardless of size, should be doing to some extent. And that is setting up a board for your business, a board that's going to help advise you in running and operating your business and keeping you accountable and help supporting you along that journey. So whether you're a solo business owner with no employees, no partners, just you yourself, you should have a board. And if you're a board, or you're a business with partners and employees and everything else, you should definitely have a board as well. And there's two aspects when we look at a board that you mentioned. We have the tax aspect. What are the tax benefits of a board? And those are powerful. But I think the board first comes down to we really look at the non-tax benefits, because that's going to provide why those tax benefits make sense. And the non-tax benefits of a board is having accountability, having a mentor, having somebody that's there along with you in a journey. Because, you and I both know, Carl, sometimes being a business owner is lonely, especially if you're a solo business owner. You don't have anybody to interact with besides your clients. And what happens when you lose a major client, or you make a mistake because you're hard on time and you make a mistake on something, and now you're all alone dealing with that mistake? Having a team that helps support you and is there with you on this journey is super helpful for not only a mental aspect, but also just helping you continue to expand and further that business. So I always look at a board as being those people that are there with you, along with you on this journey, to help you when you run into issues, to be that talking board that allows you to step away from your business, to look at it from a high level. Because when we're stuck in the day-to-day of our business, oftentimes we have blinders on. We're seeing this is our business, but we never look at it from the high level. What is going on inside our business that we can help direct as the business owner? And so it allows us to step away. And not only that, but being held accountable. If I meet with my board once a month, once a quarter, whatever our frequency of board meetings is, but if I meet with my board and I say, well, I'm thinking about putting this marketing campaign into place, or I'm thinking about bringing on a new employee to help this part of my business, guess what? That next board meeting that we have with our board, they're going to be asking about that. They're going to say, did you bring on that employee? How are things going? Or did you start that marketing campaign? What are the results been so far? And so it keeps that business owner accountable when they might traditionally not have anyone there to be accountable for. But now, so once we've determined, okay, if that isn't enough to say, I want a board in my business, whether, however frequently it is meeting, having a board in our business can help support us. Now let's look at the tax benefits. Whenever we have that board, now your board could be friends, it could be family members, it could be colleagues of yours, whoever is close to you that can help you along with your business, but also somebody that's going to be in the weeds with you sometimes and helping you grow that business. When you have those meetings, you're going to have meals associated with that meeting. That's a business deduction. There might be travel related to that meeting. Sometimes you do a board meeting at your home. Sometimes you might travel someplace to do it. I typically like with my board to have at least one of our meetings where we travel a little bit. We go somewhere fun where we can enjoy ourselves, but really talk business. And there's a cost and there's expenses associated with those different items. So there's the tax and the non-tax benefit that I think is super powerful that every business owner should be having a board of some sort, regardless of their size.
Yeah, excellent. Mike, you brought up also a legacy piece, and that's hiring your kids. And it's a legacy piece. It's a chance to teach. It's a chance to, build intergenerationally. Let's talk about that. What are some of the benefits of hiring kids? How do you go about doing that? How do you make sure also you avoid any pitfalls or compliance issues when you're hiring your kids?
Yeah, this goes along that same line of having a board of where I think every business, as long as you have kids under the age of 18, you should be hiring your kids in some way in your business. And again, there's two aspects to it. There's the tax saving aspect to it, and then there's the additional benefits that you get from hiring your kids. This concept of showing our kid our business, having them work for money, having them find that opportunity of what that means like to work, and being alongside our kids in this journey of growing a business can be super, super powerful. But when we look at the tax aspects for it, this is where it can be powerful as well, because when you hire your kids in your business, if you pay your kids out of a sole proprietorship, you do not have to withhold for that payment to them FICA taxes. So that's Social Security taxes, Medicare taxes. If they're under age 18 and you're paying them out of a sole proprietorship, you do not have to withhold for FICA taxes. And if you're paying them and they're under the standard deduction, which this year it's around $15,000 on the federal level, if they're under that federal standard deduction, they pay no federal income taxes on that. So it's an opportunity to take advantage of the non-tax benefits, but get the tax benefits of paying the kids, getting a business deduction, and your kids paying no taxes on that income. Again, this goes along that concept of after-tax versus pre-tax spending. We know we're going to support our kids in so many different ways, whether it's sending them to basketball camps or volleyball camps or amusement parks with friends. We're typically going to do that with after-tax dollars. That's what we typically have done. But what if we find something that we can do inside of our business that they can do for our business? We can pay them a reasonable rate based on the work they're doing. We get a business deduction. They pay no income taxes, and then they go out and pay for that basketball camp or that volleyball camp if they choose to. What a great opportunity to move that income from our high tax bracket to a lower tax bracket. But as with every strategy, the thing about it is, how do we implement this correctly? Our kids need to be doing actual work for our business. We have to find something that they're actually going to be doing in our business. We have to be paying them a rate that's reasonable based on their age. So if we're going to pay a local landscaping company $60 to mow our lawn, we're probably not going to be able to pay our kids $60 to mow the lawn because they're not as experienced. They're not a local landscaping company, and they're younger. But maybe paying them $20 an hour or $25 an hour to do that same work might be acceptable. So it's all about understanding, what can our kids do for our business? How much time can they put into our business? And then what is a reasonable rate for that work they're doing, and making sure that we have that documented. Now, some businesses, this might be $15,000 a year they're paying every kid. Other business, it might be $500 or $1,500 a year. It doesn't matter the amount as long as we have the support to back it up. Taking advantage of the strategy to any extent is going to be more beneficial than not.
That's good. Mike, one of the things that happens oftentimes with, faith-based entrepreneurs is they get a lot of information. They're always learning. They're listening to podcasts. They're going to conferences, consuming knowledge all the time, but they're hesitant to act. And so what encouragement would you offer them to step forward boldly and start implementing some of these strategies so that they really can start moving the needle in their objectives of being a kingdom driven, supporting the mission causes, the things that they're passionate about, using their business to do it? How do they get unstuck, I think, is really my question, and out of learning mode?
Yeah, learning is so important. And so it's important to learn, but again, and I'm one that falls into this trap too, where you learn, but you're never implementing, or you're not implementing it to the extent that you should. I think the biggest way that I can say this is, again, we talked about earlier, if we put a marketing campaign in place in our business, there's no guarantee the results we're going to get from that. We hope our business will grow. And by doing that, we're going to have more profit, which we can then support the ministries that we want to support. But there's no guarantee in that. But with tax savings, there is. We know that if we're in the 22% tax bracket and we move $10,000 from after-tax spending into pre-tax spending, we know that we just put an extra $2,200 into our pocket that we can then use that to support different ministries that we want to support. And so that, I think, is the power and the motivation for business owners. And so one thing that I always do is, because again, I fall in the same trap as everybody else, is I always have a note on my phone on the note app. And whenever I listen to something that I think is important or something that I can do in my business or in my personal life, and I'm listening to it, I put it in a note in my note app so that I don't need to worry about it right now. Drop the kids off, go to work. I don't have to worry about remembering this through then. But then what I do is that once a month, I block out about a half a day on my calendar. And in that half day, I go to that note app and I make it a point to at least implement 1 to 2 things on that note app. What things am I going to implement in that half a day's worth of work? Maybe it's a full day, maybe it's a week for some people. But what things I'm going to implement, because now I'm taking what I've learned and now putting it into practice. Because we can learn, but that doesn't produce any results. We can learn tax strategies. We can be the best. And we can know everything we want about a tax strategy. But if we never put it into practice, there is no savings there. There's no guaranteed savings for that. So it's this concept of learning and then implementing. And when it comes to implementation, I think the other key piece is correct implementation. And we kind of talked about this concept before, but we can take a strategy that's black and white in the tax code and incorrectly implement it and take something that's legal and turn it illegal simply by not dotting our I's and crossing our T's and doing it the right way. So that correct implementation is also a key to that implementation piece.
So that's good. And Mike, I want to, kind of end here on what I'm going to call the 900-pound gorilla in the room. Some people hear tax strategies and these deductions, and they think, oh, that's cheating somehow. And I'd like you to really address the fact that in the tax code, the government is incentivizing businesses and entrepreneurs to partner in places where the government really does want to stimulate certain areas of the economy, where it does want to provide services and things for its citizens. They're just not going to do it themselves. And what we have to do is really educate ourselves as entrepreneurs that if we'll look at where those opportunities are, the government is really giving us an advantage in the tax code to be a part of that. We're partnering in helping contribute to some of the needs in our society, in our culture. If you could speak to that so that we can take some of the I'm going to call it the ick factor. Am I doing something here that I'm not supposed to be doing? Because we've been preconditioned, I think, through movies and media that, the evil rich people, do these things. But the truth is the tax code really is written to benefit our nation, our society, and what we're really doing is partnering. If you could speak to that.
Yeah, Carl, you nailed it on the head. The government wants different things. In order to get those things, they need to incentivize their people to do them for them, because they either can't do it themselves or they don't want to do it themselves. And so the easiest way to incentivize the American people is by tax code. They can say, hey, if you do this, something that we want, we'll give you a tax break. And that is oftentimes what most of the tax code is written up on. And so I talk to business owners every day that are afraid about tax strategy because they think that they're cheating, right? They have a $50,000 tax bill that they have now reduced to $30,000 or $20,000. And they think, well, I just cheated the government off of $20,000 or $30,000. When in fact, it's not cheating as long as we're doing it correctly. We're just taking the code and taking what's given to us that the government wants us to do. But the government's not going to come knocking and saying, hey, you didn't hire your kids in your business, so we're just going to adjust your tax return and we're going to hire your kids for you and we're going to take advantage of that tax strategy. The government's not going to do that. The government's not going to put on a billboard, hey, every business owner should be hiring their kids and setting up a board in their business. The government doesn't do that, but it's our job to understand what incentives has the government given to us in the form of the tax code that we can take advantage of. And so, I would often say, if we look at the government wants affordable housing, the government wants every one of their citizens to be in affordable housing, to have a roof over their head. So how do they encourage people to continue to build and create affordable housing? Well, they give real estate investors tax advantages for investing in real estate. If we look at another example, the government since the 80s has wanted people to invest in oil and gas. So how do they encourage people to do that? They give super tax advantages to invest in oil and gas. Or the government wants clean energy, and so they green energy and different things, solar energy. So how do they do that? They offer tax incentives for people to put it on the roof of their house or buy a car that's a solar car. And so they provide these different benefits or incentives. When we look at business owners, the government wants their economy to be growing. They want their citizens to be hired, and they would prefer them to not be hired by the federal government. So how do they do that? They encourage people to be business owners, because as business owners, we stimulate the economy, we hire people, and those are all things that the government wants. So these are all different things that the government wants, but either can't do themselves or doesn't want to do themselves. And so instead they offer an incentive, and that incentive is through the tax code and tax opportunities. And so it's our job as business owners to understand what part of this tax code is relevant to us, what part of these incentives that the government gave us is relevant to us, and then how do I implement them to lower my tax bill while also just doing what the government gave me to do.
That's excellent, Mike. And so as we wrap up today, if somebody wants to learn more about you, wants to connect with you, where can they do that?
Yeah, two main areas. One, you can check out our podcast and training materials and book that I wrote, and that's at taxsavingspodcast.com. And then you can also check out our software, TaxElm. That's TaxElm.com. And that's a software where we help small business owners understand what strategies are available to them, how to implement them with a full team that helps walk them through that implementation as well. So taxsavingspodcast.com or taxelm.com.
Fantastic. Mike, thanks for joining us again today. And to our audience, thank you for tuning in, and we look forward to having you again on our next episode. Thanks for tuning in to Called to Build. If this episode challenged or encouraged you, take a moment to subscribe, leave a review, and share it with another faith-driven leader who's ready to rise. To go deeper, visit carlwillis.com for tools, training, and resources that will help you lead with purpose, steward with wisdom, and build what outlasts you. Remember, you weren't called to compete, you were called to build. Until next time, keep building what matters.